If I could ask everyone to take a seat. Good morning, everyone. It's a real pleasure to be here to welcome you to and introduce our new Cargill Professor in International Economics, Gary Krueger. Gary, in my 10.5 years now at Macalester, is among the most memorable faculty members that I have met. In fact, it's almost impossible to get Gary out of your mind. He's a handsome man to begin with, and he makes an impression when you see him that it's pretty much indelible. Gary's background is detailed in the program for this lecture, and so I won't simply repeat what is said there. I will note something that is interesting in its implication, though. You'll note in the biography that it talks about his dissertation, and then it notes 2 years after he completed it, the Soviet Union collapsed, which seems to imply some sort of causality that I'm not sure is there. But it is interesting. Gary's been at Macalester for a quarter century, and in that time he has had a powerful and direct impact on the lives of innumerable students. He's a terrific teacher. He's been an engaged scholar in a very, very important part of the world. He's also, and students would know this, I think, less than some of his faculty colleagues, he's been an amazing citizen of the college. He's done some of the most challenging and important service work of any member of this faculty. And he always has the best interests of the college at heart in the work that he does. And I think that means a lot to all of his colleagues, and it means a lot to all of us in the administration, and it means a lot to the future of Macalester. So it's really a great privilege for us to be able to recognize his service to the department and the college in this way. It is a real privilege for me to consider him a friend. And it's a great honor for me to introduce him to you today and his lecture, 25 Years of Comparative Economics. I'm assuming he's going to summarize rather than go through it all. So please join me in congratulating and welcoming Cargill Professor Gary Krueger. Trying to get this to work. Thank you, Brian. Thank you, Kathy. Thank you, everybody, for coming. I'm going to try to do this. I have a lot of slides, but I just want to start out saying this course is sort of my recreation course. It's a course I'd probably teach if my salary was zero. It's just a lot of fun to do, and you'll see there's just a lot of great material in there. And, well, let's get started. Over the 25 years of this course, the questions always remain the same. Who's the best? Who's on top? Who's not on top? The answers always change. And you're going to sort of see that in the next 45 minutes, hopefully, if I can get through this. But we're going to start first with the answers. So in 1990, first time I taught the course, and we saw Japan was ascendant. 5 of the top 10 banks in the world were Japanese. Japanese currency had just appreciated by 50% in 5 years. Sony was buying Columbia Pictures, Columbia Records. All the hotels in Hawaii were basically owned by Japanese firms. Right? The cover of The Economist, you're going to see a lot of covers of The Economist. That's going to be my shorthand way of summarizing a lot of data. So that's the 1990 cover of The Economist. Right? It looks, Japan's doing well. Meanwhile, we have the collapse of communism. 1991. Okay. Right after I made my dissertation got finished. It's not causal. I don't know. If they read it, they would have given up maybe.
but no one ever reads this one. So this survey came out in 1990. I actually still use it in my class because it lays out all the central issues of capitalism and how are we going to think about ownership and control and so on. So the cover of that survey looks like punters or proprietors, and it was sort of down on Anglo-capitalism. Anglo-capitalism was sort of the punters. They're just selling the stock. They're not really adding value. They're not behaving as owners. They looked at the Asiatic firms, the German and the Japanese, as behaving like true owners. They would hold long-term. They'd invest in their workers. They had higher quality. They would look at market share and sort of the longer term, right? And so we get other places where this sentiment is echoed. James Sallows of the Atlantic Monthly writes this book, Looking at the Sun. I actually used it in the course for a while. Very influential, just saying essentially the whole rules of the Japanese system are different from our system. And we ought to borrow from some of their rules. This book, Blindside, came out in 1995. This is about 5 years after the Japanese economy you're going to see starts to collapse and implode. And he's still convinced that by the year 2000, Japan is going to overtake the you see a lot of the similar kinds of projections now talking about China. There's reason to believe that those are more accurate than this one. Meanwhile, in Russia, we're going to talk a little bit about institutions. Capitalism isn't going too well. It's kind of a rough transition in Russia. So, but note here on the same cover, we get a survey on Japan where they're talking about an Oriental Renaissance, right, in 1994. That turns out to also be a bit inaccurate description. So, start looking back into the mid-90s, and we start to see a lot of changes in the U.S. We get Netscape, the internet.com starts to happen. Ford and General Motors are going into SUVs. We get a lot of computer-aided design where the whole manufacturing process is being essentially revolutionized. Right? Boeing designs, builds, and quote-unquote test flies the 777 all on computer. It does it within a year. So we get a whole new world of manufacturing happening. So you get this cover. This is one of my favorite economist covers. 1995. We get the Magnificent Seven and essentially the Anglo-capitalism, right, looking pretty good. Similarly, or conversely, in Japan, we get stagnation. Germany is not doing well in the late 90s. We get there's a book that comes out, Can Germany Be Saved? Comes out about the year 2000. So there's sort of this notion that continental is stagnant, and just sort of read about it here. Their labor market is sclerotic. They call it eurosclerosis. German unemployment is about 10%. German growth about 2%. So it's still not doing too well. So same in Japan. We got a decade now after the bubble collapses in 1990 of basic stagnation in Japan. Basically zero growth for about a decade. Banks are insolvent, but they're hiding their loans. There's very little sort of restructuring going on. Right? And nothing captures these things like the economists, right? So the loans go flat. Right? So the end of the decade, the 1990s, some of you may remember, right? We're doing really well. We got solid GDP growth. It's growth on productivity. You got the .com, it's booming. Right? In 1999, the CBO published a prediction that said that we could pay off our debt by the year 2009. They were wrong. But at the end of 1999, into the year 2000, I think this is the best forecast ever made in the history of journalism or basically anything. It just so happens to come from the Onion. So hopefully an economist did that, but I tend to think not. But anyway, so now things are starting to turn back in the other direction, right? We get the .com collapse. We get this is a cover of year 2002, so things are looking not so good on Wall Street. And then we get these scandals, and there's not just one, there are multiple scandals that go on, and there's the Enron scandal was something like $80 billion of shareholder wealth was lost. And this is all correlated with increasing financialization of the U.S. economy. And you can this paper I snatched this from shows essentially the financial sector is growing well above trend in this decade. And so there's some sort of there's concerns there. Similarly, we get probably the most troubling graph I've seen. This is from a very recent New York Times, just showing that around the year 2000, a relationship that had been very strong for a very long period of time, and that is the relationship between compensation and productivity growth, decouples. And we really haven't studied this. We don't have good data on why, but it does, and we're not sure. And so we get increasing financialization, and we got all these corporate scandals. We get this decoupling of wages and productivity. And so it's, if the Economist sort of sums it up in this 2005 cover, we're not looking too good, right? So American capitalism is so we're back to where we were back on top. Now we're kind of not so much on top, right? And as you know the rest, in 2007, 8, 9, 10, things don't look too good, right? The Great Recession is well, it's a Great Recession. We're lucky it wasn't the Great Depression 2, but it wasn't the Great Depression 3. Thanks to I'd say some good policy. Of course, in September is the Lehman Brothers collapse. I was fortunate enough to be with the investment banking class in October of 2008, and got to J.P. Morgan, and I think I mentioned something to one of their managing directors, like, it's really nice to not have to fly to Moscow to study a totally dysfunctional economy. He didn't take that too well. But the sort of the other side of it is now on the backside of the Great Recession, the U.S. is starting to actually recover well and outperform most of our competitors, Japan, Europe, etc. And so this cover comes up last, this is 2012, last year, and so we get, and there's some evidence to support that. There's a lot of good things happening in the U.S. economy now, a lot of underlying strengths. The one thing that I think is very transformative is our energy balance now, as you might think of it. It's a huge change in the U.S. economy, and 6 years ago, no one would even have thought that it was feasible that the U.S. could become energy independent. But all you have to do is drive out to North Dakota and start to see what's going on. Of course, there's downsides to this, but there's a lot of upside to it as well. One of which is going to take money out of Russia, which probably not a bad thing, right? So Adam Davidson of the Atlantic Monthly and Planet Money has this article, and this is the January 2012 Atlantic Monthly, showing how firms are bringing things back. A lot of that is due to the energy balance, because our natural gas price is about a third of the European natural gas, so it's really cost effective to make a lot of energy intensive products in the U.S. But yet we still get, now we get 20 years of stagnation in Japan. So why is Japan not able to continue on with this? There's a lot of answers that we just don't have. We don't know yet why. But anyway, so there's a sort of the European, now we get the Euro crisis in 2011. If you watch the volatility index, one of the things I put on my little app for looking at what's going on in the world economy, the VIX goes crazy. It goes on, it doesn't go quite back to 2008 levels, but it really goes up. And it's the euro, and it's Italy, Spain, and so what's going on with this? So now we got another crisis, and so to put that back in comparison to the United States, and we see that the U.S. is doing very well. Europe is sort of dragging the whole world economy down, and Japan's essentially going sideways, right? So those are the sort of the answers, right? That's sort of the history. Did it relatively quickly, I think. So how can we explain it? Right? And what do we really need to explain? We need to explain this, the decline, the rise of America, which is not necessarily easy. Why is Japan essentially flat? And that's not perfectly clear either. And we're going to see, I haven't given you much data on Germany right now, but we're going to see that the German economy is actually doing quite well. Right? So we need some tools. So what I try to do in the course is set the analytic tools that allow us to essentially answer these questions. Sometimes I succeed. I've gotten emails from students 5 years after they graduated. You know, Gary, I'm working in business now, and now I finally understand all that stuff you tried to teach us. And it's really helpful, but I didn't think so at the time. So I start with a sort of a basic paradigm. So this is how you want to think about an economic system. It's fairly complicated things. You got your allocation mechanism, command, market, tradition. All economies have mixes of these three elements, right? So we look at Germany doesn't do a lot of retail sales on Sunday. That's tradition, right? We have certain occupations that are dominated by male and female. Those are, you can think of those as traditional allocation mechanisms, right? Then you've got your sort of your institutions, your formal, informal, and then you've got policies, and they all sort of interact to create what we think of as an economic system. Comparative economics as a field has gone more towards institutions and a little bit away from this allocation mechanism. I'm sort of fighting my colleagues who do this stuff to put it back in there. And we'll see why maybe that's a useful instrument. Right? So the tools that I try to institute in the class are economics institutions, right? So rule by law versus the opposite. When I go to Russia, I get to see what the opposite is like. It's very exciting, but you really don't want to be in an economy run by lawlessness. And then I look at this economics of hierarchy, and we're going to look at that first. A lot of my work on economics of hierarchy comes from work in the Soviet system, and it's almost identical. And there's a lot you can learn from studying a Soviet system about how capitalist systems work. Right? So, but a basic hierarchy, you had a general secretary, right? We could recite them all if you wish, right? From Lenin to Stalin to Khrushchev, right? And so on, down to Gorbachev. Right? Then you get these economic ministries at a level below. Then you get enterprise director, and then you get the worker. And there's the old Soviet phrase, workers, they pretend to pay us, and we pretend to work, right? And that essentially encapsulates the basic problem. You can apply this same paradigm to how we run corporations, right? Or almost any organization, right? So the planners set goals, targets, monitor performance, reward, punish, right? So Macalester has our goals, what academic excellence and whatever. And managers fulfill orders of planners, right? So you can think of shareholders, board of directors is setting the goals of a firm, and then CEOs executing them, and then you'll have layers in the hierarchy all the way down, right? So there's always this hierarchical problem, right? Anybody in a family knows what we're talking about, right? The key elements of any hierarchy is that the planners lack complete information. They don't see everything in the organization. And Brian's probably glad he doesn't see everything in the organization, right? And the person who actually does the work actually knows more about the work than the people who supervise them, right? And that's sort of a fundamental element of organizational economics, right? It turns out this is very useful for understanding organizational economics. So you get an equation. This is your only equation. So I'll try to limit you to this, but we have a problem where maybe the agent doesn't want to maximize what the principal wants. And so then we get all kinds of mechanisms to try to deal with that, right? So we're going to measure teacher performance by test scores, right? And we're going to reward based on stuff like that. We're going to reward CEOs based on shareholder preferences, right? Sometimes the agents don't do what the principals want, right? So you can model principal agent problems very simply.
right? And I can do this in the class with a production possibility frontier, but this one's actually better. This basically encapsulates everything that you need to know about running an organization, right? You got the goals on the left, right? Sort of, the two key panels are right here, right? Is how do the agents actually trade off what are competing objectives from the principles, right? So are two good things equal to one bad thing, right? And the principal always wants you to do everything perfectly and without essentially enumerating it. So we can study the Dilbert model of central planning well. So if you really want to understand organizational behavior, just read Dilbert pretty much every morning, and you're going to learn a lot, right? So the central problem with hierarchies is this trade-off between competing objectives, and hierarchies never get that very, very, very well. You could probably say the Soviet Union collapsed right here because of this. Right? Dysfunctional organizations like General Motors used to be, and others, all have the same problem. They have competing objectives, and the agents don't know essentially how to do it, and the planners can't enforce or incentivize people to fulfill those. Right? You can talk more about that as questions, right? So here's the problem, say with Enron, right? We're going to measure CEO performance, firm performance by shareholder price. We hit the quarterly numbers to the exclusion of everything else. We lie, cheat, and steal, and do whatever we need to do, create offshore subsidiaries, right, that allow us to meet the numbers. And that's all we care about, is meet the numbers, right? I have some slides I didn't include in this presentation. You can show organizations that tend not to meet the numbers outperform those that do in the long term. Right? So you could do a Yahoo Finance Costco versus Walmart. Walmart can meet the numbers, pay people the lowest possible wage. Costco beats them. Right? You could do Toyota versus General Motors. Toyota share price much, much higher. Right? You could look at other organizations. Apple, Microsoft. Apple clearly is not a meet the numbers company. It's I want to build whatever Steve Jobs used to think was really the coolest thing in the world. Right? All right. So let's go back to here a little bit. Yeah. Now we so let's look at the Japanese type firm. Japanese type firm were, with this Asiatic system, their corporate governance structure isn't like ours. Right? They have a main bank, usually Tokyo. It's going to essentially manage and run the firm. And essentially, if the firm is doing okay, they leave it alone, and they don't necessarily put pressure on it to make short-term profits. This had really good effects in the 80s. It turns out to not be so functional when you need to make profits, especially when the banks essentially are losing money. So some of the astounding loss numbers in Japan in the late 90s were about, all the bad loans were about 25% of GDP. And moreover, they were kept secret. Right? So the Ministry of Finance would be duplicitous with the Tokyo banks to hide the bad loans. And they would just do things like reevaluate them. They would buy, the Ministry of Finance would actually buy the stock of these Japanese banks in order to prop up the balance sheets of these banks. So it was sort of, we're all just hiding from each other. Right? So we can summarize some of the characteristics of the Anglo-capitalist firms. We get an equity finance firm. We get shareholder control for the most part. Firms maximize shareholder profits. Right? We got, usually Anglo systems have weaker safety nets. We usually have lower levels of unionization, and we tend to manufacture using, Fordist, Tayloristic type structures. So assembly line, if you're familiar with Fordism, you know what I'm talking about. There's an emphasis on economies of scale, so we translate this American style not only to Henry Ford, but to McDonald's, Walmart, other kinds of organizations, usually often outside of manufacturing. We do it in banking, etc. Right? And these Anglo systems tend to be consumer-oriented. We don't save. Americans are among the worst savers in the world, which makes us among the best shoppers in the world. Right? So we tend to orient the whole economy on consumers. Right? By contrast, the Asiatic continental structure, these hold true to a wide range of systems. Japan, Korea, even China now, when you watch what's emerging in China, it looks very Japanese in its structure in many, many ways. We get a bank-centered control of the firm. We get more opaque ownership. It's all not clear how a typical Japanese firm is actually going to be owned and who's going to control it. We sort of do it all. In the Japanese case, we do it informally. In the German case, it's a little bit more formalized, whereas things are informal in Japan. The Germans codify things, they write it down, but they look similar in terms of how they're structured. Right? These systems tend to be export-oriented. Some would characterize them as mercantilists or quasi-mercantilists. Right? They have high savings, high investment, and they typically have a very high share of manufacturing in their GDP. So whereas the US might have 15% of its GDP in manufacturing, Germany might be in the 25, 22, 28%, depending on the time period. Japan is similar. Of course, we know China is much, much higher. Okay. So that's how we're going to understand corporate governance. The key is that we're going to try to look at is when we go back to the question, to the answers. Right? How did the U.S. rise, fall, rise, fall, rise, fall? Hopefully it rise. And why did Japan stagnate? A lot of it has to do with their corporate governance structure. The other element we need to look at is the rules of the game. Somewhere around the early 90s, watching what was going on in Russia, I came to the realization that lawyers are probably not unambiguously bad. That having them structure your economy and rule by law turns out to be a really good thing. And a lot of the work on institutions, economics institutions, has evolved, I would argue, in response to our inability to really figure out what was happening in Russia in the 1990s. And so you get the seminal works on economics of institutions, right, coming late 90s, early 2000s, and a book I'm currently using by Asamoglu and Robinson, Why Nations Fail, came out in 2012. So it's important to look at this. The literature is getting a lot better than it was even a few years ago. So there's sort of a sense where the Anglo-legalistic traditions have advantages over alternatives, especially over the alternative of not having any law. That's sort of an extreme case, right? But they tend toward greater transparency, except for when they're not. The Asiatic systems tend toward opacity. It's not clear. A lot of work has been going into essentially uncovering like ownership structures and control structures in German firms and Japanese firms, and it's not immediately obvious how to do this. So one of the questions we continue to return to is when to centralize, when to decentralize, when to know to do which. And it's not always clear, and the answer is often changing. Right? And that's the problem with that is, right? So there's some classic literature I use, right? Is the economic problem we face is really adaptation to change. So here's where I take the course completely outside of what we would normally teach in a principles course or intermediate micro. We don't really find an equilibrium paradigm, P star, Q star, right? That useful for this class, right? We need to think about economics differently as an evolutionary process and how organizations change and adapt to it. And the answer is that it depends, right? Asiatic systems did very well when consumer preferences changed for higher quality, higher mileage cars. So we could sort of think of this as sort of an intermediate amount of uncertainty. The fundamentals of building a car have not really changed for a century, but the types of cars, the variety, the quality, Japanese systems were the best in the world at doing that. Japan could put a car into market in 2.5, 3 years. General Motors was taking 5 to 7. Right? They could, Japanese assembly line in the late 70s was producing something like 12,000 varieties of a car on the single assembly line. Right? And so they were very flexible, and a lot of that's that skilled blue-collar training that they would do. You know Henry Ford, any color you want as long as it's black, right? Okay. But Anglo systems, it appears, and this is my interpretation of what I see, is Anglo systems seem to do very well with what I'll call disruptive change. When we've got the internet revolution, when we've got basic .com types of economic structures, right? And global financial collapse. Anglo systems dealt with collapse, I think, more quickly and better than the Asiatic systems. You have 20 years of Japanese stagnation, and the U.S. arguably had a greater level of financial shock in 2008, and it appears, I'm going to make a prediction, that we're through the worst of it. Whereas Japan has found itself unable to essentially get out of its stagnation for 20 years. Okay. So we call it modern dynamics, where consumer preferences are changing. Japanese systems, are very good, right? You look at what Sony could do and Panasonic in consumer electronics, and they could come out with a new variety and fill up a marketplace very, very quickly. You look at when you get to disruptive type systems, you really need to think about just ripping things up and starting all over again. And this is Schumpeter's creative destruction. So probably the most important dimension to the course I've added over the years is we really need to focus on creative destruction. If you did like an NBER, National Bureau of Economic Research, search on creative destruction on their working paper side, I think you get 6 papers. So this is an area we really don't do a lot of high quality research, and you only get 3 that are fairly recent, but to really understand capitalism, the way it works on the ground, is you need to think about creative destruction. And this is where capitalism, or especially the Anglo version, is a rather brutal variety of capitalism, right? Creative destruction is not simple, easy, painless. You got to sell off your bad assets. You got to invest in the good. You've got long-standing traditions. So to the degree, especially you see this in a German economy or Japanese economy, tradition governs a lot of the way things happen in those places. And you're going to have to rip that up, throw it away. And organizations that can do this are going to succeed and thrive. Organizations that can't will stagnate, and maybe Brian sympathizes with what I'm talking about. Right? And so what makes creative destruction actually happen on the ground? It's your factor markets, right? Factor markets are markets for land, labor, capital, right? Can you sell off your assets, get something for them, redeploy them in another use, right? Can you do this with labor? Can you do this with land? These things are not easy. They're often painful to do this, right? Like shutting down the economics department and investing in somewhere else, right? I'll stipulate that we're probably the best in the world at creative destruction, and let it go at that. So how do we do creative destruction? We have all kinds of instruments in U.S. capitalism. We have hostile takeovers. We have venture capital on the upside, right? We have private equity that goes in and carves out chunks of firms, spins them off. Right, we have all our alumni who are in the investment banking industry, and that's what they're doing, is taking assets, carving them up, redeploying them, and a better use. Right? The equity market in Japan, and this is less true of Germany, but it's completely true of China, is not a market for corporate control. It's really a market to speculate. And so you and I in the college, we might be able to borrow, we get all our alumni at Wall Street, we could borrow $400, $500, $600 billion, and we could go buy Apple computer today, right? That's not going to happen in a Japanese firm. Why not? 100% of the shares in a Japanese firm, say Toyota, are not traded. About 40 or 50% are locked up in the keiretsu structure. So there's really no market for corporate control. So what that means is managers in Japanese firms don't really face the outside pressure of either restructure or die, right? So they don't ever face death. They always face only the upside, and that creates incentive problems. Right? Similarly, on the labor market in Japan, a typical lifetime employee salaryman, it's not a huge fraction of the labor force, but it's a significant fraction, they're locked up in their careers. So they're paid on a seniority-based wage, right? If they leave their firm when they're mid-career, they're going to essentially go back to their entry-level salaries. So they have an incentive to essentially stay with the firm, so there's a lot of job lock that goes in a Japanese firm. So the labor market has problems. What we're going to see is the sort of the big story that really hasn't been researched,
Ken Taylor had it in his Conversible Economist blog the other day, is the German labor market. And the Germans have really done a lot of reforms in the last decade. But let's go back to creative destruction here. So here's our Case-Shiller housing index. Lots of destruction, a lot. If we added that up in wealth, it's hundreds of trillions of billions of dollars in wealth that was lost, but a lot of that's redeployment, that's foreclosures. There's something been like 4 million houses foreclosed in the last 5 years. I was looking at a comparison of bankruptcy laws. In Spain, you're not allowed to go bankrupt. Ireland doesn't have a bankrupt law. Right? So here we make it relatively painless, although it's painful, but comparatively speaking, it's a possibility, right? Which allows for a lot more redeployment of resources. And as you see, the Case-Shiller housing index is sort of spiking back up in the last year and a half. So there's some hope for recovery, because I need to sell my other house. Here's a very telling graph, and it gets back to the capital market in Japan. So remember the start of the show, we were at 40,000 on the Nikkei, way back in 1990. And Dow was there, this is the S&P, I don't know, Dow was like at 800 back then. Look at your rate of return on investing in a typical Japanese stock, right? So that's 20 years roughly. If you slice it at 1994, we still have a negative rate of return, and that includes this blip off of by Prime Minister Koizumi in the last 6 months. Otherwise, you'd have a negative rate of return on capital invested for 20 years. There aren't too many organizations on the planet that did that. The Soviets were the other one, where they managed that, and we know how that ended. So that's a first order symptom of basically no creative destruction going on in the Japanese capital market. Here's another good example of creative destruction, the iPad. The iPad basically is ripping up the computer industry. And this is the rate of change in sales, Microsoft-based PCs, and you can sort of see the shares on the other side. I think the graph on the left is a little bit more telling. But it's a major disruption to the computer industry. And Americans sort of accept this sort of thing as normal. I was reading in the, I don't know where I was reading, I think on The Economist, about how there's a movement in England to save the local pub. And so there's this movement out there to allow one to petition to their local government to prevent developers from pairing up the local pub and redeveloping it for some apartments or whatnot. This is not something you would typically see in America, right? We would say, oh, it's normal, tear it down, start all over. The final area of sort of creative destruction is our labor market works pretty well in some dimensions. One of which is returns to skill. We reward skill very highly and better than most places, according to this is a recent study by Honishek, who's a labor economist. You see Japan somewhere in the middle. Germany coming in second. So the German economy, we're going to look at it in a minute, it has done some really nice reforms. And so we get a sort of a separation between the continental German approach and the Japanese approach, which is relatively recent. Here's another article in 2009 in The Economist about there's no exit from Japanese firms. But Germany undertakes some fairly serious reforms in 2003. These are under Prime Minister Gerhard Schröder. And the idea was we're going to solve that problem. To go back to that slide where we looked at the sick man of Europe in 1999, there was a concerted effort to change the German labor market. A lot of these reforms look very Anglo. They allow more flexible employment, they allow job sharing, they increase the work week, all kinds of things we would normally associate with an Anglo-type system. But the success is astounding, actually. So this is in 2013. Way at the bottom is youth unemployment in Germany. It's about 6%. And the American number, any guesses? 16, I looked it up just before. So so whatever the Germans did to reform their labor market, and a lot of work needs to be done on understanding these reforms, is very successful. You look at the, I'll show you some other graphs here. We also get the Germans revise a bankruptcy code in 2011/12. Right? And so they're going to they're starting to look more Anglo. They're still keeping a lot of the German structures. So you may have heard about the union vote in the Volkswagen plant in Tennessee. The union, or the company Volkswagen, really wanted to essentially allow a classic German structure, which is co-determination, where half the board is populated by labor, the other half by capital, +1. And so it's a very, there's still a sense in Germany they're going to retain the uniqueness of the German system, but in areas where they need to, it seems as they're willing to reform in an Anglo direction. And it seems to be quite successful. So you look at some of these numbers here. This is German unemployment rate, very low, so the lowest in Europe. We've got government budget deficit. My German wife will appreciate the austerity of the German approach, right? Pay down the mortgage by tomorrow, or else, right? So we all get we get a lot of good social outcomes in Germany. So I was just there this summer, and a lot of good social outcomes. The Hofbrauhaus is one of the greatest examples of public ownership serving the social needs very well. The U.S., on the other hand, we got a couple of bad signs. We've got some good things going on, but this is just this weekend. This came out in the Economist, and there's a sense where the long-term unemployment has maybe permanently scarred the U.S. labor market. So we may be in for some rough sledding in the years to come. One of the strengths of the U.S. in the last 25 years has been our well-functioning labor market. There's been some work on this. It's not clear why our labor market is no longer functioning as well as it used to. There's a sense of, you get stigmatized, you're unemployed for more than a year or 2 years, and you're effectively unhireable. One of my pet theories is that with the housing crisis and foreclosures and underwater mortgages, there's a lot less migration, intra-U.S. migration than you used to get. So one of the things that differentiates the U.S. from, say, Europe is, we don't have any jobs in wherever in the Iron Range. We're going to move to the Twin Cities. We don't have any jobs in Minnesota. We're going to move to North Dakota and enjoy the oil boom. Those migrations are less down, and I think real estate might be part of that. And then I put that to the now chair of research at the Federal Reserve, that Sam, what do you think about this thesis? He said, I don't see it in the data. He's just been studying migration, but I'm still convinced I'm right. That if we look closely at the relationship between housing and job migration and labor mobility, we'll find it. But we need to do that, right? So we need to see that again. So what do we conclude? So factor markets, creative destruction really is at the heart of explaining economic performance. And what's at the heart of creative destruction is our legal institutions, right? And rule by law, markets for capital, labor, and land, right? We see convergence in economic systems. I didn't talk about convergence from the U.S. side, but a lot of U.S. structures, particularly in manufacturing, just-in-time inventory, focus on quality, variety, et cetera, flexibility, right, have been just adopted completely from Japanese. And so that the core of the Japanese economy, the Toyota, et cetera, is always going to remain, and it's a huge value-added locus for the economy, but it needs some creative destruction. Right? So I don't know the answer to this question. Right? So we'll leave it to future allocation committees to decide whether or not we're going to have this. And these are people I have to thank for this.
Brad for the rolling credits. I can take a few questions. Maybe I can answer them. I can take them.
Gary, over here.
Yes.
Congratulations.
Great.
2 points that I would like you to kind of comment on. One is the role of research and development, investment in research and development, either in the up escalator going up, or whether it is going down, in the absence of that, whether there is any place in the analysis for research and development in helping the explanation of this. And two, this creative destruction, Schumpeter's idea that you have applied, I have a little problem with that, the way at least you have talked about in the United States, in the sense that the forces of creative destruction did not play just in the market. I mean, the state intervened to a certain extent to stop some of that destruction. So where is the role of the state, therefore, in the making of the up and down analysis of comparative economics?
So the R&D one's easy. It's a good thing, right? So you look at a lot of those disruptive technologies I point to. They originally started in DARPA and other places. Right? So there's a huge role for primary research. I don't catch you on the negative side of research and development. Do we do too much? Is that what we?
There's an argument here in this country that part of the reason why the economy has wobbled is because we have been very niggardly on investment in research and development, and primarily driven both by corporations but also by the state itself.
You say too little.
Yeah, too little, yeah.
Yeah, I would argue, I mean, right now, if you look at our post-Austerian budget in the last 2 years, primary spending on R&D is at an all-time low as a fraction of government spending or GDP. I would argue, I mean, we look back at the 60s, 70s, and so on, we had a fairly large level of spending in these areas. So I would certainly agree we should spend more on higher education, right? I need a raise. We should do more research in comparative economics. The role of government is complicated, right? I mean, but I tried to make the case that we need rule by law, but the best rule by law is the one which is basically objective and impartial and uncaptured, right, by special interests. And that's hard, right? And a lot of times it doesn't happen that way. And so, you could look at the bailouts in 2008, 2009 as an example of asymmetric, rule by law. It works for bailouts work for bankers, but they don't work for foreclosures, right? So and that's the problem with creative destruction. That's why you're always going to get a lobby against creative destruction, right? Because these gains, the pain of creative destruction is never evenly distributed, and we do a really bad job in structuring policy to compensate those who have been destructed. Right? We know about it in theory, but our compensation schemes don't follow through with what we should do. I think. Yeah.
So besides the sort of economic factors that are in here, what about like demographic factors? So I think of Japan
Sure.
and Germany, both as places with zero or negative population growth, where the U.S. has positive population growth, mainly because of immigration.
Right. Well, we used to.
Or we used to. Yeah,
Right.
But, those things are influencing.
Yeah, huge. I didn't talk about that in this, but there's the notion demographics is destiny. It's absolutely true. Immigration is the best way to be a parasite on the global economy ever invented, right? Because what we do is we take young people who are risk-taking, they're educated and taken essentially nurtured to adulthood, and then they immigrate, and we take advantage of them, right? And so that's been the history of the U.S. in a sort of a different way. Look at Japan; there's no immigration, right? And I would argue that that's a huge explanation for their stagnation. The other thing with immigration, you get a lot of risk taking, and you get a lot of creative from immigrants, right? And so, and the data on immigration are unambiguously positive for the economy
They will, again, hurt certain subsectors depending on the type of immigration. But in terms of skilled immigration, there's almost no research that I'm aware of, and Kareem, correct me if I'm wrong, that show a downside to skilled immigration. Which says we should fix that policy now. Yeah. Sarah?
So would you be for a radical reform that makes corporate boards in the United States more like German boards? Get labor on boards?
Oh,
So what I'm looking for
Yeah.
is how to get more equality in the distribution of wealth while still maintaining creative.
there's an old Soviet joke that ends with a punchline, and it's sometimes I disagree with myself, and I'll just spare you the joke and give you the punchline. And so sometimes I disagree with myself, and there's, the more I watch this stuff happen over the last 25 years, there's no one right answer, right? So the Germans have found a way to work it out, partly because they're Germans, right? And would it work necessarily in an American style? It might, and there is certainly scope for that organizational structure to be nested within an Anglo system. It doesn't have to be universal, right? But could it exist in a broader way than it does currently? I would argue surely it works in Germany, right? So this is where I really have trouble with my economist colleagues who look at economics like it's an ideology, right? The more you study other systems, the less ideological you can be about economics, right? Because, well, it kind of works here, and well, it works here, but it doesn't work there, right? And so, and that's the one hand on the other part. But we could certainly experiment with it and see how it will work out. Well, there's certainly room for improvement in our corporate governance structure. There's massive room there. How that would work, I'm not sure. More transparency, more minority right? The ability of you as a single shareholder to bring a motion to the board at a shareholder meeting, that should certainly happen. We sort of think of protecting rights of the minority in the U.S. government, but in corporate structure and corporate governance, rights of the minority are almost non-existent. And that could certainly be a place for remedy. I'm free. I'm going to go do my addendum right now. Thank you all for coming. Really excited.